Now, after 8 days of wins for the tech sector, one tech name that is under pressure this morning is Tesla. That stock is moving to the downside here after down a little over 1.25% after our next guest lowered his price target on the name based on some new calculations for the company's Robotaxi program. Joining us now to discuss, we have Tom Narayan. He's RBC Capital Markets lead equity analyst for Global Autos. Tom, thanks so much for being here with us to discuss your decision here. Talk to me about the single biggest driver of this price target change for you when it comes to Tesla.
Yeah, there are really two things. The first thing is we looked at what pricing would be in a world of robotaxis, and we realized with working with our internet team who covers the ride-hailing companies, Uber and Lyft, et cetera, that pricing will actually be lower. It'll come down as this will be a regulated industry. So we lowered our pricing. The second thing is we increased the value that we think will go to those companies, the app companies, the Ubers, the Lyfts, as a higher revenue share percentage than what I was assuming previously. So it's really those two things that lowered the Tesla-specific robotaxi valuation. But we still love robotaxis, and we still think it's going to be the biggest contributor for value for Tesla.
By when, Tom?
Well, my valuation, I think you guys remember, is based off 2040, and then I discounted back. But I do think on August 8th, we will get an announcement that we will start seeing some actually near-term deployments of robotaxis, but it'll be in cities like we've seen probably like from GM Cruise and Waymo and cities like San Francisco, Austin, Phoenix. It's a very small scale. You're not going to get this at mass scale for years, if not decades out.
And on that exact point, Tom, when do you anticipate the Tesla robotaxi revenue kind of being a contributing factor to Tesla's overall profit margins?
Oof, not for a while. It could be 5-10 years away, but it's one of these things where when it happens, it will happen in a big way, right? The automotive or transportation industry is a $6 trillion industry today. Autonomy, robotaxis, autonomous vehicles has the chance to make this much bigger, 10 billion potentially, right? Takes share from planes and trains and gives mobility to the elderly, children, people with disabilities. And so it's one of these things that will be a tectonic shift in how we all live. It's going to take a long while before it contributes financially to any of these companies.
Tom, when you think about city infrastructure, does there need to be a significant change in city infrastructure in order to facilitate safe robotaxi rollouts?
Absolutely. Yes. That's probably the biggest hurdle. We spoke to the CEO of Stellantis last year at our conference, and he said, like, the tech isn't really that far away. It's not the tech. It's really the cities need to re-engineer themselves, right? I mean, just think about, I don't know if you've been to Paris, the Champs-Élysées. It's not a lot of computers able to make decisions. It's humans making aggressive decisions on how to drive. And so cities have to completely change themselves, reorganize. It's already happening in China. Some Western cities in London, go check out Oxford Street. There's only certain vehicles can drive there. Manhattan is talking about stuff. So it will happen, but yeah, cities are going to have to change dramatically to allow for these things to happen, but they will.
Hey, Tom, I do want to end on the Lyft and Uber of it all. In your note, you talk about lowering the estimates for the company's robotaxi venture, but you're also allocating a bigger revenue share to service providers like Uber and Lyft. Why?
Yeah, so there's like three parts of the ecosystem here with robotaxis, right? You have the software, you have the vehicle, and then you have the app. I think there's going to be a lot of software providers. I think Tesla will be a big player in this, but there are a lot of folks making software for autonomy. The vehicle, lots of car companies are going to make the vehicle, but the app, that's one where our analyst, Brad Erickson on the internet team, talks about how that's very sticky. It's a moat. Just look at how you use your apps today, right? Like how many apps are you going to have on your phone to order a car, right? I have one. And so, that's really, I think, where a lot of the power lies. And that's something that I've raised. And they collect right now for every Uber fare I think you take, I think 25% of it goes to the app, goes to Uber, right? Not the driver. So that's a big lion's share for that stickiness. So that's why we changed our view on that. And we think actually that the app is going to have a lot of power. Tesla's going to make their own app, sure, for sure. But we do think some of these other app makers who already own customers are going to have a lot of power as well.
Elon Musk just won his pay package, Tom, but it seems like he's also on the AI front in his other endeavors, perhaps on a warpath to make sure that he is drumming up some major partners growing forward on the corporate side here. How much of a risk is that for Tesla?
His pay package specifically?
Not the pay package, but when you hear that he's not only threatening to ban his employees from using Apple iPhones and whatnot, but when you hear about him and the other businesses that he is also running where he might get upset that some of the core partners that he's had for years are now cozying up to other partners instead of XAI, for instance. Does that create an overhang for his other businesses, in this case, Tesla?
I don't know about that. I mean, this is a very well-run business. It's not just Elon running this company, right? As much as I think a lot of folks think it is, right? Just go look at the event they hosted in March of last year where they had all those folks they trotted up on stage. I mean, this is a company with some really powerful businesses, not just this Robotaxi endeavor, FSD, the energy storage business. So these are, and they're led by some very enterprising, smart individuals that are running these businesses. So I think at this point, he's the visionary, but these are businesses that are run very well by his lieutenants.
All right. Tom Narayan, always a pleasure to speak with you and grab some time. Tom Narayan, who is the RBC Capital Markets lead equity analyst for Global Autos. Tom, great to see you.